All right, I'm going to whack a bee's nest, but I'm going to be completely candid, like being part of our unfiltered life. So just staying within that idea of Merlin, let's just have an unfiltered life, let everybody in on all the warts and all. I have to say, when I thought of crypto traders, investors in the past, I pictured hoodie wearing 20 something year olds, right? I mean, that's what it was. And I wasn't wrong. I mean, I saw my kids, my young guys always in their room playing, like, I don't know, World of Minecraft or whatever the heck it was. I used to have to try to boot them out of the house and say, why don't you guys, like, you're 15, 16 years old, why don't you go out and chase some skirts or something? Like, what are you doing, hanging out here all day? But, okay, now, this day and age, that idea is completely wrong. All right. So it's not just 20 something hoodie wearing 20-year-olds or 25-year-olds. A new report that just came out that really, really shocked me was that the biggest crypto investors right now are baby boomers. That's people my age. And they're not dabbling because they got some money. They're deploying serious capital. So let's talk about why that matters and what's happening in Bitcoin, Ethereum, and all altcoins today. Welcome back, Crypto Crew. It is your boy Tom here, bringing you the hottest in Bitcoin and crypto action. If you like what you see, make sure you give us a like. Make sure you hit subscribe if you haven't already. Please share us with your friends and family. They may enjoy the channel. It helps us because YouTube is really quite difficult. And also, if you're feeling really altruistic, come on over and click on Park Avenue Trading. Join my little channel. I'm trying to get up to 1,000 subscribers. All right. So anyway, remember, always come on over to X and follow us on X where we talk about Bitcoin, crypto all day, every day because we're crypto maniacs. All right, let's break it all down. Bitcoin itself, let's check it out. We're going to start with the lower time frame. Right now, it's holding steady right around 123,005 right now, just under about 4.4% on the day after tapping the new all-time high at 126 odd earlier in the week. Now, what we're seeing is completely normal behavior. Markets need to breathe after big runs. We had a pretty decent size run upward in the marketplace. We knew that 127 was going to be tough. We said the marketplace actually should be within a box between 127 and 118,000. All right, so that was like the areas of interest right now. So completely normal. Markets are taking a breather after a big run. Now, what's important is that institutional demand still remains massive. Spot ETF inflows continue to outpace daily mining supply, keeping structural pressure to the upside right now. Now, I'm seeing a healthy consolidation right now. It's not distribution. Okay, so as long as Bitcoin holds above, let's say it's got to hold above this 117.5. That was the zero point 0.5 standard deviation off of the original 125,686 high. Now we have a new high at like 126, 126.2, right? 126,200 for those of you that don't understand when I say 126.2. So really this has moved up a bit. I'm going to keep it there. I'm going to keep it there because I could right now say that this is a little bit of an aberration right now because we could still be in consolidation. This was like the last breath before we consolidate and potentially could break lower. I'm just saying that it's not happening right now. The warnings would be short term if we broke this little pivot low right there. Now, I know I always say I'm aware this is a 2-hour chart. I get it. I've been around a long time. I understand time frames. But, like the short term actually gives clues to the longer term. Of course, now 2 hours is a good chart, and 4 hours is a great chart, 8 hours is a fantastic chart. If you're looking at 5-minute charts, no, that's just like minutia. And actually, really within a 5 minute chart, like it does, like the low or the high that's created in the 5 minutes could be the turn point of the market. So even if it's a really, really low time frame, you got to say you have to respect it. Okay. So some people trade 5 minute charts, 10 minute charts. I don't know. That for me, that was always like trying to trade the speed of light. That was, that was just too much for me. But anyway, so the important point right now, I'm going to highlight it right now and take you over. I'm going to say, is this little like demand point that we got right there? Okay. The marketplace came down. Bears are trying to push, perhaps to get down to the 119, but market reversed. Now, look at this. There's always symmetry in the marketplace. Okay. When we originally drew this short-term support point, okay, when we were up here, we said, well, if it breaks this level, we could potentially come down to this pivot low here, and ultimately, you could try to attack this pivot at 119,360. The only thing I'm trying to point out for you is I want you to look at symmetry, okay, or how markets react. Look how, when we were talking about yesterday, how old support would become resistance. Trend lines are the simplest tools that you can use. Everybody can, learn how to use a trend line. Trend line is really simple. You connect and some people say you want 3 points of contact where demand points, and demand points are just lower lows that on each side have higher lows, right? And a supply point is a higher high, and to the left of it is a lower high, and to the right of it is another lower high. So that would become a supply point, right? So like that would be a supply point, like right there. Here would be a supply point right here. Okay, here's a demand point. Here's another demand point. You find them all over the place. So anyway, some people say 3. I say 2 is fine. Now, again, that's become subjective, but there's no real hard and fast rule to it. So pick one that you like. If you want 3 points of contact, fine. But you definitely need 2. And since I said yesterday, I'm very impatient. I just see 2 points of contact. I'm good. I'm good to go. Those are my levels. So when this level broke, we said we could come down to this pivot. We can come down to this pivot. Now, the point I'm trying to make is look at what happened. We came right up to the trend line and got rejected again. Now we're going to reattempt it again. And really what we need to do is we're going to get through 125, okay? So if you look at your previous levels, right? So if you were just a short-term trader, you could say, hey, look, I want to sell. This trend line, this old trend line is now resistance. I want to sell that. And where do I want to buy it? Well, I'd love to buy it back at this meridian, which you got. Okay, now of course you can say, well, that happened. That's 2020 is perfect hindsight, right? But if you develop a trading system using that type of style, it's very low risk. And you're basically trading, short term, like within what the parameters are. All right. So now I see a healthy consolidation going on. As long as Bitcoin holds above, I'm going to say, well, I'm going to start with like this level, 121, say, and also 119, but it definitely has to hold above 117.5. Okay. So the pattern that gave us the clue way back when is right here, 2024. Okay, it laid the foundation for the next parabolic run. Last year's triple bottom started the breakout. This year's triple bottom just confirmed it for us. Okay, so it's very important to understand patterns. Market does not repeat exactly, but it certainly does rhyme. So this chart is telling us that we got a parabolic move in front of us. Of course, we're going to navigate you through it. So get into the free group. It's free. Dude, it's free. And dudette, it's free. All right. So we can see Bitcoin's engine is still running quite hot right now. We have a bull flag that's printed, and we got expansion that's starting to load. The phase can last longer than most expect. But remember, take profits on the shows of strength on the upper levels, because we're going to get a retracement. So, retail celebrates screenshots. We're pro traders. We're gonna take profits. And again, get in a pro group because we'll help you out. Okay. So, what was I alluding to in my open? Right when I started off saying, well, when I first thought of crypto traders, say back in 2010, 2014. I pictured these hoodie wearing 21-year-old somethings that really didn't have a great handle on things because I was comparing them to my uh, adolescent young guys, and I have some daughters as well. But I was completely wrong about. They were absolutely right. They were right about crypto because, and one of our commenters, one of the people that made a comment actually said that, you know, they made an excellent comment. We have really bright people that are on our YouTube community. I got to give them kudos. One guy said, or I don't know, maybe a girl said that, the G7 dismissed crypto and then it was too late. And that was probably one of the best comments I've read about it. And I really started thinking about this. Say, wait, that's really intuitive. Because I was an old world G7 banker. Okay, I dismissed it. I said, "This is crazy. This is not going to work. This is one of the best Ponzi schemes I have ever seen. Man, they're geniuses. Whoever did this, whoever this Satoshi guy was, even if he even existed, what a genius! What a genius! But man, was I wrong. Okay, so what was I alluding to? All right, so here's what I was alluding to. There's a new Bitcoin market investor study report that's out of Australia. And it shows that baby boomers ages 60 and up are now the fastest growing group of crypto investors. Their initial deposits are up 723% year on year. They're trading this stuff. Their daily trading activity jumped 93%. They should be getting into our free group. If they're trading actively before they lose everything, they should get into our free group. That would be my suggestion to them. They should definitely come over to my FOREX Park Avenue site trading. I'll give them some insights. They could trade a little bit of FOREX too right now, right? Diversify yourself. Get into Euro Yen and Sterling Yen. That's cool. I'm actually short Sterling Yen. Euro Yen right now. It's the same price. All right. So women are entering the market with bigger deposits than men for the first time in 5 years. And self-managed super funds, basically retirement investment accounts, are piling into Bitcoin, Ethereum, XRP. They're now making 77% of allocations. There's Caroline Bowler, a CEO, said it best. These aren't speculators chasing trends. They're retirees with capital, intent, and a strategy. They want to see their money grow. You could just see, look, I'm staying on this chart right now because we're looking at a bull flag breakout. Targets are much higher, right? And they're taking part of this. Now you could say, look, Tom, this is a study that's in Australia, right? What does that got to do with me? I'm in the United States. I'm in England. I'm in Germany. I'm in Russia. I'm in China. I'm in Vietnam, or wherever you are in the world. Well, I'm going to get to that in a second. It's massive because it means crypto is no longer speculative. It's being integrated into long-term financial planning. Now, that's happening in Australia, right? Now, this is the point. Remember, people are people. What's happening in Australia is likely to mirror investor behavior in the US, Europe, Asia. It's beyond demographic shifts. Okay? So while retail traders are hesitating, the older generation with capital is quietly building positions. Could you imagine? That is awesome, right? I get to just picture some gray-haired old lady in a wheelchair trading Bitcoin. That's awesome, right? Some 94-year-old buy me, go long Bitcoin. Mine at 123,496. I'll take 5 coins. Oh man, it's awesome, right? So what I'm trying to get to is right now. Okay, let me get my thoughts in order here. It's really the kind of smart money rotation that tends to fuel big legs, big moves up. Okay, so again, this is different because mentality was one that I dismissed. But we are in this is a new world here, man. What a time to be alive. This is incredible. Things are shifting. This is a brand new marketplace. So it is, you can say, It's different this time because this time it's different because it is different. Okay, so if we here's a homework for the crypto crew. If you want to really become a super trader, you just stick with me through this. Okay, I want to show you something. Okay, I'm gonna talk about a trader that's legendary. His name was Jesse Livermore. I love Jesse Livermore. I know a lot about Jesse Livermore. I know more about Jesse Livermore than I know about Nikolai Darvis. And another comment in the on the YouTube where a guy said he was a trained economist. I didn't know that. I said, you know what? Let me check it out. The guy was absolutely right. He was a trained economist, but he was also like a ballet dancer. That was from yesterday's video. But anyway, before we get into the Bitcoin, Jesse Livermore's legendary accumulation cycle, what I want you to look at is this chart that I have right in front of you. Okay, we could see itself, Bitcoin itself. The structures have been completely clean, and they're too clean to ignore. Okay, so what I'm alluding to here is that we got a rounded bottom on an eve. You can't beat a rounded bottom eve. Can I'm telling you, I'm 60. You can't beat a rounded bottom eve, man. You got the cup and the handle. We got the breakout. We're looking for expansion. So now the RSI above 70 is key. Cross it, Bitcoin is going to take off. Okay, that is for sure. So now, as I was alluding to, okay, where I'm talking about, Jesse Livermore, a legendary trader, I want to take you over to what he came up with. All right, now he came up with a cylinder. Now, for those of you that don't know who Jesse Livermore was, he was an incredible trader. He started at like the age of 14 in the brokerage house, and they were actually called, bucket shops, right? He used to go to bucket shops to trade because they really didn't make any type of trades on the market. They had ticker tapes in there, and people would place, bets based on, what the last price was, and he did extremely well in there. He was a master at reading like price action, and he made $100 million in 1929. Now, I'm not talking about $100 million in 2025 dollars. I'm talking $100 million in 1929 dollars. He was selling the stock market like crazy. He was selling it so hard that at one point, JP Morgan was asked to come and rescue the stock market because he almost bankrupted it. Like not only him, I mean, the market crashed, right? The 29 crash, right? But he was short. So JP Morgan actually sent an emissary to him in his office and said, JP Morgan's asking you, please do not sell the market anymore. It cannot take any more sales. And he actually said, I understand that. He goes, and I was actually thinking of turning my positions around right now because if I didn't cash out, no matter if it went to zero, I wasn't making any money. So he actually turned his positions around probably really at the low of the 1929 crash, and he rode the marketplace back up again. Now, $100 million was gained by Jesse Livermore. Now, the odd thing about Jesse Livermore is that he ended up shooting himself in the Sherry Netherland Hotel in 1940. He committed suicide, and he just left a suicide note to his third wife. He was quite the playboy. But when his third wife found out that he had like several different apartment buildings all over New York City that she didn't know about, where he used to take women to all the time. So he was quite the playboy in his day. But anyway, I digress. But what was I saying? So basically, he left a note to his wife saying that he was a failure. So how could a man who had mastered the marketplace, made over $100 million in 1929, think that he was a failure in 1940? Well, he had several losing years, but I don't know. I think the main mistake that he made was you make $100 million in 1929. You trade if you want to trade, but you trade with like a $50 million $50 million account. You don't need to start trying to hit the cover off the ball anymore. You already did it. That was a tremendous amount of money. So all right, so that's enough with Jesse Livermore. If you could read the book, There's his popular book itself is a book that's written about him, legendary. Okay, is Reminiscences of a Stock Market Operator. That's the book to read. That would be homework book number one. I got another homework book for you too. You're gonna have to do a lot of homework if you want to become a super trader. Okay, but anyway, let's look at this. And the reason why I have this up, because it all kind of falls into the next segment of this video. All right, so Bitcoin is tracking Jesse Livermore's legendary accumulation cycle. Now we're about in entering into stage 8 of a vertical mania phase. And we're telling you, if you miss it, it's going to be generational wealth that's missed. So you want to make sure that you're in our free group. You want to get involved with us, because what an accumulation cylinder is it has a widening mouth, right? So it's a consolidation pattern where price swings between two non-parallel trend lines, creating the cylinder itself. So we're looking at it right here. Two non-parallel trend lines, right? This is actually showing a vertical expansion. If you took this line, if Frank took this line and really projected it out, he'd find his point 10 right there. All right, so right now, this consolidation pattern, over time, the mouth widens, and right now, Bitcoin is actually mirroring this legendary setup. So Bitcoin's price is bouncing in between the trend lines, right? It's consolidation before the breakout. Stage 8 is really where the fireworks start to happen. That would be the break up in here, where we'd actually start really taking off. Volume is the key to this whole thing, okay? So Bitcoin's volume profile needs to match up, and then you'll have this breakout. Now, combine this with mass adoption, sovereign accumulation and institutional demand, and we're just getting warmed up. This is the reason why I brought up the article of Australia with the baby boomers. Okay, see how I'm all trying to tie this madness in? And the reason I put this chart up now is because I want to leave that this is the second book for your homework if you really want to be a super trader. And the book that I'm about to talk about is a book that was written in 1841. That's right, 1841. Okay? And it influenced the way Livermore viewed markets. How do I know that? Because I studied Jesse Livermore. I just love Jesse Livermore. Matter of fact, I had a black Labrador retriever. His name was Jesse Livermore. He passed away, unfortunately. I still have my golden retriever, who's 12 years old. His name is Leonardo Fibonacci. And I got myself a Newfoundland puppy. He's only about 2.5, but his name is Montague. He's nothing to do with markets. My girl wanted to name him Romeo, and I go, no, I'm not naming my Newfoundland Romeo. I'll name him Montague, which was Romeo's last name. And if I get a female, Newfie, I'll name her Capulet. That's what I figured. Anyway, I digress again. So anyway, Charles Mackay wrote a book in 1841 that actually shaped Livermore's idea about market psychology. He wrote the book Extraordinary Popular Delusions and the Madness of Crowds. Extraordinary Popular Delusions and the Madness of Crowds. This book could easily describe any type of market today, okay? He chronicled how crowds behave irrationally but predictably. From tulip mania in 1637, that's our Dutch friends that actually run this site. That's Merlin and Frank, and we also have, who else we got? We got over there. We have our main trader there. Why am I losing his mind? Why am I losing his name for a second? Justin. I can't believe you see what happens when you're my age, right? If you don't take your ginkgo biloba, see what happens. But anyway, so from the tulip mania of 1637 to the South Sea bubble, if you don't know what that is, you got to read about that, and even the gold rushes that followed. Now, I read this book. I got to reread it again. I read it many years ago, and I have to reread it again. But really, the genius of the book it isn't just historical storytelling. It's all about human psychology, and human psychology plays out in this cylinder, okay, and what we're seeing in the markets right now. McKay, Charles McKay, understood what modern science now confirms. When people are uncertain, they look to others for cues. That's why it's really like if you're in a crowd, and something's happening, you just get away from a crowd because you don't know anything could set off a crowd. You don't want to, get involved in anything like that. So it's really herd behavior, and it's everywhere in markets, social movements, stadiums. When you go to a big football game, U.S. football or soccer, European. It's actually more in European soccer than it is in United States football. Those people are Europeans are maniacs when it comes to soccer. You go to a Liverpool game, forget it. Okay, so anyway, even in virtual crowd simulations, this happens. So whether it's a Dutch tulip, or digital tokens, the crowd's emotional circuitry hasn't changed in over 400 years. This is why I'm talking about this, and that's why I brought in the Australian study, because modern research now gives McKay's insights even hard data. Cross-cultural study across 14 countries found that herding exists in all major economies, E7 and G7 alike, no matter the cultural or regulation. It's just there. Human beings are human beings. And that's why we're seeing certain things happen. Okay? In social psychology, psychologicals are universals that show that the need to belong, imitate, and conform exists in every human society. Crowd simulation research that 70% of people in the crowd move as a group, okay, following local cues rather than rational plans. So in finance, these same instincts manifest as fear of missing out, panic selling, herd-driven bubbles. So different accents, same emotions, different markets, same fear and greed. That's why people are people isn't a slogan, it's a trading truth. So by understanding the way people react, and also now picking up cues from what's happening in Australia, I'm sure if the studies were done anywhere else, we'd find the same type of behavior happening. It's the beginning of the behavior. All right. I'm not saying that you want to be in the crowd. I'm saying you want to be part of the 30% of the crowd when the crowd is overdone. But this is just the beginning of the crowd herd mentality right now. So Bitcoin is mirroring gold legendary breakout. Why does it do that? Because it's crowd behavior. It's psychology. When gold stops, Bitcoin's going to be the huge beneficiary of it. Okay, we've been saying it all along. So gold's cup and handle triggered a historic melt up. Now Bitcoin is showing the same script. The move that sent gold vertical is about to rewrite Bitcoin. We've said it before. And I'm trying to tie it all in with this mad psychological ideas. You could say, put them in the comments. You think I'm nuts? Say it. Tom, you're absolutely crazy with this. But I suggest that you read the book. I suggest that you read the books, the two books. You definitely want to read Stock Market Operator for Jesse Livermore, and you definitely want to read Extraordinary Popular Delusions and the Madness of Crowds, written in 1841. I mean, that would be. I mean, you're sitting on the beach and you're reading a book like that. If people are gonna be like, "What the heck is this guy? When did that come out? Who's that by? Is that by Stephen King?" Oh no, Charles McKay in 1841. All right. So really, what this means. I mean, if you look at this, and I'm going to take you to this chart right here. We're going to show you again. When gold finishes its legendary run, right now it's sitting right at 4,000. When it finishes its legendary run, you're going to see the exact thing play out that's on this chart. 2017, okay, gold peaked, Bitcoin exploded. Okay, 2020, same exact thing. Gold peak, Bitcoin doubled. 2025, gold has made an extraordinary run. Extraordinary run. The capital flow is too clean to ignore. It's showing one thing. That's why on Saturday I'm going to have a fun time where I'm going to be talking to you about that chart where I said, the reason that Bitcoin could go to 380. You guys laughed, but I'm saying I just fixed that because Frank had it at 2020. I'm thinking 2026. He actually said 2025. I think that's a little irrationally exuberant. I went too far away from it right now, but who the heck knows? Who the heck knows? But anyway, Bitcoin, once it happens, when we look at Bitcoin itself, how it's mirroring gold, as you said, when gold actually comes off, finishes its run, Bitcoin's about to explode. That's where the super cycle is going to begin. All right, so let's get on over to good old Ethereum. Ethereum itself, $4,600 rejection right now. Right here, marketplace kind of came up, dropped down from that $4,600. It's trading right now $4,395, off around 3% from the high. There's chatter of a short-term rotation. Traders are locking Bitcoin profits, and they're looking to move over to Ethereum at a better price. So layer two plays like Arbarium, Optimism, and base tokens. The biggest story here is Ethereum itself. The ETF flows are quietly, slowly accelerating, signaling institutional appetite that's slightly building beneath the surface. Now, we haven't seen it yet, right? Because we got Bitcoin dominance that's still pretty high. So Ethereum's taking a back seat to it right now. We know where Ethereum's going, okay? So the fundamentals remain solid for Ethereum, and we still have a bull flag that we're playing with right now. Still flirting with the bull flag pattern. We could actually get a retreat back down to 3,008. That would be amazing buy. But we're looking at a target 6,800 overall short term in Ethereum. Now, as I said yesterday, we're going to have some troubles at like 5,000, 54, 5,500, 6,000, 6,400 before we can get up there. But like I said, get into our free group. We'll guide you through it. We see that, fundamentals definitely remain solid in Ethereum and all, if you look at DeFi itself, volume's climbing, staking yields are consistent, and Ethereum's liquidity footprint across the network keeps expanding. Ethereum really itself, I'm telling you, it's walking the Johnny Cash line. And in order to get to the Johnny Cash line, or the ladder itself, we got to clear the all-time high, just like this. Now, you notice that we haven't really completely cleared it yet. We had this nice retrace back down. Look, it's right back down to that 3,008, right? That's an important point for Ethereum. Get in our free group. We got some Ethereum trades that we're lining up, that's for sure. And you're not going to want to miss the breakout up through the all-time highs, because that's going to really repeat the 2021 run. And we're looking at Ethereum. Once it does clear this, we're looking at the Johnny Cash line. And here's the Johnny Cash line. Remember, way back when 1,440 was the point to break. Right then, at one point it was 4,800. Right now we got $4,000 breakout price. We're trading slightly above it. We need to break through that 4,800 clean, right? Because that's going to take us, that's the all-time highs right here. Got to get through that, and then it's on its way to 6,500, 8,000, 10,000 is not out of the question for Ethereum. We've been saying that for a while, and when it happens, we will take a victory lap. That is for sure. Let's move on over to good old Bitcoin dominance so we can see what's going on in altcoins. And here's the trouble with all altcoins right now. Bitcoin dominance, 59.54. It's actually climbing back up. It has the potential, really, to come back up to the old support line will become resistance to 62. If it does that, Bitcoin's going to be moving, Ethereum's going to be stuck, all the other alts are going to bleed. That's okay. That's what's going to happen. We can't say, Bitcoin dominance is go up and everything else is going to rally. That's not going to be the case. Now, if we really need to see Bitcoin dominance below 57.5, I've been saying that. We haven't had it yet. It's starting to climb. And like I said, just as I showed you in the earlier part of the video, this marketplace could actually come back up to the old support line and then fall again. So really you got 2 points. You got 59.14, and we're above it right now. We're at 59.55. So this thing is, trying to reverse itself Okay, and that's going to cause some problems in Ethereum. It's actually going to give you a better price to buy Ethereum at and other altcoins of your choice. But make sure you get into our pro group. We will guide you to the best utility coins that there are. So right now, if you look at this, we can say that altcoins, I'm going to show you this chart. All right, so I want to show you 2017, 2021, 2025 altcoin market cap. And I want to point out some things on the breakouts. I want to point to the bleeds, okay? And the bleed sections that were fake outs. I want to show you this. Look at this bleed section right there. Bleed, okay? Market road and also like really had a was showing some, it was no bleed because it didn't break down through the support line. But look at this bleed section right there. Okay, I want to take my little circle, put it over here, show you this bleed section right there. Same thing could occurred over here. Okay, here's another bleed section, which is like a fake out, right? And we could get another one. Okay, if Bitcoin dominance stays up, we could actually get another bleed section here. So it's actually showing that we don't have the complete altcoin season yet, but we could get another bleed section. That would be an excellent place to get into the proper utility coins, right? So 2017, even after the bleed, it birthed, millionaires were made. 2021, again, we had some bleed before the breakout. It created legends. 2025, we could get some bleed again, but it's going to be this year is going to be so much bigger than every other year before it because of the institutions that are involved. So altcoins right now are showing some short-term weakness, but structurally they're gearing up for something bigger. You got to watch the Bitcoin dominance, as I just showed you. If it starts to roll over from the current highs, that could ignite the true alt season that we're waiting for. Now, if we really look at it, XRP overtook Bitcoin as the most traded asset in Australia. Okay. Over here, I don't really know. I should get some data on that, but that's interesting because that XRP, man, is giving me some troubles. I tell you the truth. Never mind. I sold some of my girls XRP at 302. I did it for my account, so I could buy it back and actually throw it back into her portfolio. But I was like a little concerned with it, and I didn't like that. It actually moved down to 279, but it's holding steady right now. Like what is it, 280, 282 or something like that? Let me see where the good old XRP is right now. XRP, XRP. Come on, man, where is it? Yeah, it's like 282. So not a bad sale for myself, but she said I would open up the closet. I got XRP hit me in the head, So anyway, so I got Solana volumes that spiked 69%. Well, overall altcoins allocations are up sharply across retail and institutional desks. All right, now how do you get involved in this free group that I've been alluding to? All the links are in the description here. All right. Look, you click this link right there, you'll be taken over to our free Telegram trading community, completely free to join. We drop insane alpha trading opportunities daily. The room is buzzing, man. There's a lot of people in there. There's a lot of trades that are being taken. And you got Frank, you got Justin, you got oh my gosh, what's his name? Chris, Kevin in there helping you out all the time. And you got me every once in a while popping in between trading Forex. So you click that link, you'll be taken over. If you are a lone wolf, and I understand that. I've been a lone wolf a long time in my life. You just want to have a go at it yourself. Well, you click this link, you'll be taken over to WeX, one of our brokers of choice, where you can get actually some really good deals right now. I believe that they're offering 0 fees for life. Really cool. If you want to check out BTCC, another broker that we fully endorse and back, great broker. They're giving away a $500 giveaway for new clients. Jump in, man. Hey, you want to help me out? Park Avenue Trading, click that link. You can join my little site. I'm trying to get up to 1,000 subscribers. I got a bet going on that for a box of Opus One cigars. So I already lost one bet. It's double or nothing. So if you could help me out, I'd really appreciate it. All right, so let's get on over to altcoins again, where we can check out a different chart. All right, if we look at this chart right here, we can see it. Okay, every major breakout on this chart actually sent us into altcoin season. Okay, so the bullish crossover crossed again. It's where the rotations are going to start. We got to keep paying attention to that Bitcoin dominance, though. Okay. So once we get the clean break and once we get Bitcoin cooling off and not in the front seat anymore, we're going to get portfolios that go vertical. All right. So what's the things we got to watch right now, as we close up this video? And thanks for sticking with me throughout this whole thing. I know it was quite long. Okay. But sometimes, I try to give you some really good information that you, when you're at the bar and you're having a beer with somebody, you can talk. Hey, did you ever read that book, from Charles Mackay back in 1841? Anyway, so what do we got to look out for? All right, so we got Bitcoin right now trading at 123, 488, 489, whatever. The levels we have to watch. Okay, 121 for sure, and of course, I'm going to say the 118 or 117.5 on the downside. I don't know, if we can get a clean break above the 125, 126, we could attempt this 127. If we break 127 within this week, it's going to actually be pretty explosive, I would think. All right, so we got to keep an eye on that. Those are the near-term supports. We know the resistance for sure. Ethereum itself, as long as it stays above 4,000, we're in good shape with Ethereum. Right here, 4,000 level, 3,008 would be a fantastic scoop. But as long as we stay above this area and if we can finally clear this 4,600 cleanly and take out the old top, bulls are completely in charge in Ethereum, and they will stay in control for the foreseeable future if they can do that. Altcoin rotations could accelerate if Bitcoin dominance cracks lower. That's what we're looking for. So Bitcoin dominance is up. Keep an eye on macro signals. The government is closed in the United States, which is a great thing. I'm just enjoying myself, not having to hear these like Muppets talk all the time. Markets, look, our final thoughts really in Bitcoin itself. All right, we got to realize that markets breathe before they can break higher. So we're in a little bit of a breath stage right now. Boomers are entering the game. I can assure you they're probably doing the same thing in the States because people are people. Institutions are loading Bitcoin and Ethereum flows are still rising. That's not a top. It's a structural shift in adoption. Okay, so final takes. The markets have not, actually the markets have changed, but the players have not. From the 17th century Amsterdam to 21st century in Sydney, people act the same way under pressure. Okay? That's why studying the crowd psychology is more powerful than any other indicator. Do your homework, get the book, read it. It's the oldest and most consistent edge in trading. So what do you think? Leave some comments for me. I love reading all the comments. Make sure you come on over to X. Follow us on X where we talk about Bitcoin, crypto all day, every day with crypto maniacs. So what do you got to do? You got to definitely join the free community. I mean, it's free. Can't beat the price. If you don't want to join the free community, fine. I understand you're a lone wolf. That's cool. Make sure that you do your own research because I am not a financial advisor. I'm just a trader like you. And the next thing you got to do is got to trade with your head nut over it. Don't over leverage yourself. Okay? Don't bet the deli to win a pickle, as Larry Height would say. Don't bet the deli to win a pickle. All right. And also, as a short-term trader, what do you have to do? You got to enjoy the party, but dance near the door. I will see you tomorrow. Good trading, folks. Cheers.